All right. What is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about natural gas. There's lots of news to break down. Really, there's been a lot of developments when it comes to the natural gas environment and, the whole ecosystem in general. So we are going to give an update on some of the news as well as break down some of the charts in today's video. As always, the content on this channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer and let's get into it. So we are going to break down a little bit more of a micro chart, right? You take a look at the 4 hour, a little bit of a smaller time frame, see where we are on a day-to-day perspective, what some of the key levels are. And then we're going to take a look at the futures on a macro chart here and kind of go over a bullish and bearish scenario. That way you guys can be prepared for whatever comes next. We're very close to getting our next big move. Now, we got to dive right into the news. So be sure to smash the like button, subscribe to the channel if you guys are new. And natural gas did actually end lower despite the surplus reduction. And this may have been the culmination of a so-called buy the rumor, sell the fact trading event. The gas futures closed yesterday at their highest in 3 weeks amid expectations that today's weekly EIA inventory report would see another smaller than normal injection that would further trim a bearish storage surplus. And, in more news, when we take a look at Gazprom's natural gas export woes bode well for growing American LNG complex, right? And now, citing the fallout from the war in Ukraine, Russian natural gas behemoth Gazprom said its net income for the first half of 2023 plummeted. Now, why is this important? Why are we talking about this? Because we're talking about American LNG. The U.S. has become an LNG powerhouse really ever since the whole Russia-Ukraine situation. And US LNG projects, they win higher processing fees as interest rates climb. And when we break that down a little bit further, right, we can see that long-term buyers of US LNG are willingly agreeing to higher liquefaction fees at newer export projects, according to analysts and developers familiar with the matter. The U.S. emerged in 2022 as the world's second largest LNG exporter on plentiful supplies of natural gas and relatively low processing costs per metric ton of LNG. But rising interest rates and higher construction costs have pushed up liquefaction fees, also known as tolling fees. Now, the willingness by long-term customers to pay higher tolling fees and ultimately higher prices for U.S. LNG was because newer projects are still providing very good margins due to the low gas prices at the Henry Hub, the main trading point for U.S. natural gas futures. U.S. LNG remains the best source of low-cost LNG in the world. If the price used to be 2.25 and it's 2.75 now, okay, but it's still the cheapest price of LNG anyways. And we dive further and we actually go into some of the metrics, right, from the EIA, which, if you're ever looking to get some of the most accurate data and, really, really good info on natural gas, I definitely highly recommend the EIA. You'll get some really good resources there. Now, this is our supply table, right? And you can see that supply is up compared to this week and also last week, or I'm sorry, compared to last week and last year. All right, you can see total supply is at 108.8. Last week it was at 108.5, and last year it was at 104.6. This is really kind of just breaking down what you're seeing on this chart here, right? With the blue being total consumption and then the brown being total supply. When you take a look at the demand table, you can see that total demand is up though this week from last week and also from last year. So slight increase in, the supply table, but also slight increase here in the demand table as well. Now, when you take a look at the rigs and the rig count, this is another thing that's a little bit more bullish for natural gas, and something that the bulls are paying attention to is the weekly total rig count, right? And you can see that there was this sharp incline where they were adding lots of rigs, okay, and here we've actually seen a decline, right? And that's what we're seeing here. And when you take a look at it from a weekly and a year, a year-over-year basis, you can see, basically that it's down 27% from last year. And, this is the natural gas rigs we're speaking of. And when you take a look at the change from last week and last year again, you can see that we're starting to see declines in these areas. So just something else to pay attention to, part of the narrative when it comes to natural gas. We also have the working natural gas and underground storage, approaching the highs here of its 5-year maximum. All right, which is 3,440 billion cubic feet. We're at 3,115 with the 5-year minimum at 2,513. So, you can see here just a little bit clearer on this chart that we are upwards, towards that maximum range right there. And earlier we were gravitating in that lower range, periodically. And if we take a look real quick, these are actually the London sugar futures, and you may be a little bit confused, why am I talking about London sugar futures? Well, the reason being is because we came up here at 729 and hit the 729.9 target. So remember that 729.9, we came up and exceeded those targets there. The reason I'm bringing that up is because I actually started a free newsletter, completely free to you guys, giving out free trade ideas, as well as updates on the market and overall good investment intelligence as well. And, this was an article that I put out a couple of weeks ago. And you can see, what the chart looked like. All right, we were looking for the breakout up to that 729 area. And if you take a look at the current chart, you can see it did end up getting that breakout and hitting the 729.9. And that was actually my son right there. If you guys don't know, I did just actually have another child. He's approaching 2 months old right now. So, he's sitting next to me sleeping and he wanted to say, hey. Now, here is the 4-hour chart for the futures, for the natural gas futures. And what I'm looking at is we did currently just break this shorter term downtrend that we had. And we're starting to see a push up higher, and we have a very tight trend line that we're hugging here. So, while this is bullish and we're seeing bullish momentum, again, we did pull back today, but the big thing is we need to be cautious if we break through that trend line. That is potentially when we could see a reversal, right? If we take a look at, the last time we had a very bullish trend line like this, that's, what we ended up seeing, right? We ended up seeing a little bit of a reversal back to the downside. Now, what are some of the signs that you can look for, right? Because for now, until the trend is broken, the trend is still your friend. Well, one of the signs that you can look for is going to be your MACD and your RSI. All right, the RSI is what's known as a leading indicator. It's your relative strength index. And then you have the MACD, moving average convergence divergent. It's going to be a little bit of a lagging indicator. And so you can see when we came to this overbought territory, and then shortly afterwards, again, so leading indicator telling you you're overbought, lagging indicator is going to tell you what happened after prices, after it's already happened. And you see we got the bearish crossover here. This is something that we want to pay attention to over here, right? So we did hit overbought territory and we started to see a pullback, but we're already back outside of that overbought territory. So we still have room to go back up to the upside and continue this bullish trend here, but we need to be cautious because we have, the potential to see our 2 warning signals, right? So we got the first one here. If we end up seeing this MACD roll over and cross below the red line here, it's very possible that we could break the trend, right? Just like what we did over here, when we had the bullish trend and then we got the MACD crossover and the RSI in the overbought territory. So you do want to pay attention to that. But that doesn't mean that the futures have to crash anytime soon. We've respected the trend line many times here, continue to bounce off of that area, and we'll see if it can continue to push higher. Now, we are going to break down the macro chart here for the natural gas futures. But if you made it this far, I would really appreciate it if you would subscribe to the channel, smash the like button, and also sign up for that free newsletter using the link in the description or the comment section down below. So there's 2 scenarios here that we're looking at. One is going to be an ABC correction to the downside, all right? And we're looking and we're setting up for our breakout to the upside to potentially take the natural gas futures back to the $3.50 to $4 range. Okay. Sorry, I want to highlight a specific area for you guys real quick that we haven't tested, or really, haven't retested. And it's right in here in between this area. So you can see when it was prior support, right? So we have prior support over here in this area, and that's when we get the larger push higher. And we haven't retested it as resistance, right? So old support becomes new resistance. We completely blew past it through here, and there was no support at all. And this is where liquidity is going to be for the bears, right? So, if bears are looking for a textbook re-entry into short positions after profiting off of this massive move to the downside, then it makes a lot of sense. They would be around that $3.50 to $4 range on the breakout of this, chart pattern that we have right here. Now, it's very possible that you could call this a rising wedge. You could call this a bear flag, right? So we do have to keep an open mind essentially for the bearish scenario here. And this will take the natural gas futures down to about $1.08. $1.08 is essentially what you would be looking for. And rather than an ABC and then starting a new bullish cycle, this would actually be a 1, 2, 3. And then this ABCDE here is a 4. And then we get wave 5 down to about $1.08 on the natural gas futures. Again, mentioning the MACD, take a look how we got our bullish crossover here, and natural gas futures have been bullish ever since. It's been a slow grind up, but it has grinded up. And, we need to be cautious if this curls back to the downside. But for now, the weekly MACD is still trading above. We want to see it continue to trade above and, really create some space in between the red line there, indicate some more bullish momentum. We also want to look to see if we can get a breakout. Initially here, we had this initial trend line on our RSI that we were looking at, right? If we were to just kind of draw it in pink here, so it's a little bit clearer for you guys, you can see we did get a nice breakout there. We want to see if we can break out from the larger, more macro, trend line here. This is the initial bearish divergence that really helped push the drop down, right? We have the highs here, we have these higher highs here, we have these highs here, we have these lower highs here. This is the divergence that I'm speaking of. And, it's not the only reason, but, it was a technical indicator of some bearishness coming in the future, back at these times. And it's really been a huge puke fest ever since then. And we're going to see if we can actually start to get a rebound back up higher, or if we're going to get that 1, 2, 3, 4, 5 bearish scenario to the downside. Let me know your thoughts down below. Thank you guys for watching, and I'm out.